Hello and welcome back to my channel. I'm Erica Nicole and you're watching Rooted and Rich. And today I want to talk to you about my financial philosophy. Before we get started, I want to let you know that this video is for educational purposes only. If you want more information around your personal situation, you should contact a financial advisor. So I wanted to talk to you about my philosophy because I feel like everyone should have an investment philosophy. If you don't have an investment philosophy, you'll get tricked and you'll follow trends, and eventually you'll end up losing more money than you ever make because you didn't have a philosophy that you hold to when you invest. And so thinking about what is your philosophy, what is it that you do specifically when it comes to investing, and sticking to that plan no matter what is important. And so I want to tell you my philosophy and maybe help you think about your own philosophy. My philosophy stems from a couple different places. I had a really good mentor that really helped me understand investing. And then I also read the book, The Simple Path to Wealth. And I think that, the simple path to wealth is a simple way to get to wealth. It's not the best way. It's not the most complex way. It's not even the most optimal way, but it is the simple path to wealth. And that is what I like, was simplicity, because at a time where I have so much going on, there's, working, motherhood, everything like that, I didn't have a lot of time to understand a ton of things in order to get started. And sometimes when there's too much information or there's too much you have to do, you get into paralysis and you don't move at all. So first, my philosophy is to keep it simple. Is to keep it very, very simple. The next thing in my philosophy when it comes to investing is to build where I'm already building. So that means for me, I talked to a mentor. I remember, sitting down with a mentor and saying like, hey, I'm starting to make more and more money. I have a lot of money left over after I pay my bills. I'm thinking I should be investing or doing something better with my money. I have my 6 months emergency fund. What should I be doing? And she told me to double down on my retirement investing, meaning that if you're putting 6%, put 12%. If you're putting 12%, see if you can get to 20% or 15 or 16%. But that is your biggest pool of money over time. And so if you've been investing since you got out of college, you got your first job out of college, up it. Go ahead and increase the percentage that you're putting in, because that money compounding over itself with the interest is going to take you, it's going to lead you to wealth. One of the things that I recognize now that I didn't know back then is that what it takes to get you from $0 to $100,000, it takes a long time. But that time to double that or triple that or even multiply that by 10, it takes a lot less time. And that's why people are able to build $1 million portfolios through their retirement investment over the course of 30 to 40 years. The next thing in my philosophy is to buy index funds. I don't really buy individual stocks. I'm not saying there's anything wrong with individual stocks, and I'm not saying that you shouldn't buy individual stocks. There are people that have made tons and tons of money buying individual stocks. But my strategy is to buy index funds. And the next part of that strategy is to buy them, hold them, and continue to add more. And so I purchase index funds because I want to get exposure to a broad market. I want to have some protection. I think it's a hedge against risk, because when you have an individual company and you have stock in that, if that company goes bankrupt and goes away, then you went from whatever you had in there to zero. But with an index fund, you have more diversification within that stock. And so you have multiple companies within that. And so if one company drops to zero, another one rises up in there. And I like to think about like the S&P 500, the 500 top companies. Well, if one of those companies no longer is the top, the next company will rise to the top, and that'll be company 500 when company 499 went kaplunk. Right. And so my philosophy is to invest in index funds, especially when it comes to outside of my retirement. My other philosophy is to buy, put it on automatic investing, and then leave it alone. I do not read the news. I do not listen to social media about what's going up and what's going down. I believe that if I continue to purchase index funds and I continue to put my money in my retirement, that over time it will build me wealth no matter what the dips are. And I'm not saying that the dips won't happen, that whatever the dips are, whether, it goes down 50, the market goes down, a drop in one day of 30%. I believe that the market over time always trends up. And so I have never panic sold or panic bought or any of that. I don't time the market. And that is really important for me, is not to try to time the market. My philosophy is that I am going to figure out what I can afford to put into my retirement account, what percentage, and how much I'm going to put into my brokerage account. And I just sit it and forget it. I put it on automate and I don't mess with it. I don't mess with it. What I'll tell you is this: when it comes to investing, I am earlier in my years of investing. So I feel like I have about 30 more years to retirement, maybe 20 if I'm lucky, but really 30 more years to traditional retirement. And so right now I am in mode of just pouring in. And so I hedge against the stock market by having a job, by, going to work every day. And so I'm not really worried about what the stock market does. I feel like your philosophy over time will shift. As I go closer to retirement, I think I might have not just index funds, but I might have like a bond index, or I might add more things to create less risk in my portfolio. I currently have an age-based plan within my retirement account. I know there are better ways to optimize. I don't like to use my brain power on that. I don't look for optimization. That's not the key for me. For some of you guys, that will be the key. Optimization, low taxation, some of those things might be a part of your philosophy. And if they are really important to you and they are really what you want, then I would say go for it. But understand yourself as an investor. I am a passive investor. I am not an active investor. I do not study the stock market. I do not study companies. Just don't. And so that's not where I spend my energy. That's not where I spend my time. And so my philosophy is really to buy small increments over time, sit it, forget it, and let it grow. I don't check my brokerage account nor my retirement account often. I really look at it maybe 4 times a year, if that. Sometimes I accidentally look at it because the same with where I work, our health benefits is in the same place where we can see our retirement account. So sometimes I need to go in there to find a doctor or find a specialist, and I'll end up seeing the number and I'm like, wow, that's amazing. But I really don't go and look. I really don't look at what it is maybe 4 times a year. And the same with my brokerage account. I don't really pay attention. I think of my strategy at the beginning of the year. How much do I make? Do I want to up anything? Do I want to give more here or more there? And after that, I sit it and forget it, because my strategy is not about complexity. It's about simplicity. So that is my philosophy when it comes to investing. I really like to hear from you. What is your strategy? What is your philosophy when it comes to investing? And if you don't have one, what are your thoughts? Did this trigger anything for you? I have a more in-depth video on investing and the things that I actually do. And you can find that video here if you're interested. Let me know in the comments, what is your philosophy when it comes to investing? And I'll see you in the next video. Bye.